I could have been a millionaire. I should have been. Don't make the same mistakes that I did. So I'm John Rettinger. I'm making videos mostly on tech for the better part of 10 years with over 1.5 million subscribers, and during that time, I earned my MBA. I also learned how to be smart with my money and make it work for me. There's nothing sort of secret about it. You just need to know where to look. You don't need thousands of dollars in the bank. You can start investing with whatever you have, even just as low as a few bucks. All of these is just my opinion, and a disclaimer, I am not a licensed professional. I'm just a dude who's been doing this for a while. All right, so here's the story. In December of 2015, I was super excited. I took delivery of a brand new 2016 Tesla Model S. It was amazing. I had never seen a car like that. The 17-inch screen, electric torque, the speed. The car was my favorite car that I've ever owned. The base price of that car was $80,000. So if I had been perhaps more prudent or had a crystal ball, instead of buying that car, if I had bought $80,000 worth of Tesla stock, and this one like hurts me in my heart, as of this filming, it would be worth slightly over $1.4 million. And if you're quick at math, that is a 1,700% return. I'm gonna sit with that for a minute because it's tough to think about. It's crazy, I mean, right? Like, no one's got a crystal ball. You don't know what's going to happen. You can't let what you should have done cloud what you should do right now. It's just going to eat you alive and cloud your judgment. So obviously my car example is extreme, but in the world of investing, extreme examples hold true. And it kind of got me thinking, is Tesla a bubble? Is something that's grown so big it is bound to pop and come back crashing down to reality? If you want to get a response out of anyone, just ask them what they think about Tesla. Most have a very strong opinion either about the company or Elon Musk himself, thoughts about cars, but everyone's got some thought. And it's even more polarizing now after Tesla bought $1.5 billion of Bitcoin. It's not something that I've ever really seen from any other company, let alone a car company. Asking a family member about Tesla is like talking politics on Thanksgiving. Is bound to get heated. But as Tesla has risen crazy fast to be the world's most valuable automaker, which is a wild thing to even say out loud, let's say their ludicrous rise kind of begs the question to somebody looking to make money. And again, the question is Tesla a bubble? So a bubble is an investment term that kind of gets thrown around a lot. Essentially, it means an economic cycle that is generally characterized by what you'd expect, the rapid escalation of market value, particularly the price of the asset, so Tesla stock here. This fast inflation is generally followed by a very quick decrease in value, the pop, or a contraction, sometimes referred to as the crash of the bubble bursting. Bubbles form when there are pretty obviously more buyers than there are sellers. So certainly that definition of bubble sounds very, very much like Tesla. I mean, the stock rose 700% in 2020. Its price to earnings ratio is an insane 1,601. So for context, the P/E of the S&P 500 is 30, which is itself well above the historical average of 15. And just for fun, the next highest tech valuation index belongs to Western Digital, which has a P/E of 860. I don't even have to know or care what a P/E ratio is to know that Tesla is through the panoramic roof. And because the ratio is so insanely high, most people start to look at it for a correction. It's ripe to fall back down. But these are numbers that we haven't really seen historically, leading a lot to think that it's gotta be a bubble, because we've never seen this before. That giant rise can't last. So looking at Tesla, it certainly seems like the first part of the bubble definition, right? A cycle of rapid escalation. You can just check that off. But the second part of our definition, the pop, so to speak, is it imminent or is it even in the cards? I think the answer there is going to very strongly depend on who you ask. So in my eyes, I'm a younger investor who in all candor has been driving electric Teslas now for over 6 years, and I do have a stake in Tesla. The answer is not really. But depending on what answer you're looking for, you can definitely find that sort of a self-fulfilling prophecy. There are plenty of people out there who will pound their fists and scream to the heavens to avoid Tesla like the plague. Analysts and car execs, specifically Bob Lutz, have been predicting its demise for years and saying they've hit a saturation point. It's gonna get too fierce. People don't wanna buy EVs. Their quality control is garbage. The list just goes on and on. And in all fairness, there is merit to some of those arguments. But investing is about buying in what you think is going to happen. And if you think Tesla's hit its peak, then stay away. You may be the one who gets to tell everyone that you were right. And there's some pride in that. But the other side of the equation, and the one that I'm on, is that Tesla is just getting started. And their bubble, if there ever is one, is far from bursting. So there are crazy price targets on Tesla. Webush, for example, has one at over $1,200 on projections that they'll hit 1 million cars produced annually by 2022. And they very well may. I'm bullish on Tesla, not really even for their cars, but for their software, their technology. So let's talk a little bit about the batteries. Every car maker is moving to electrify either some or all of their lineup over the next decade. It's been announced, it's happening. Whether it's government mandate, it's staying out of the curve, or whatever, cars are going more electric. And every one of those cars is obviously going to need batteries. That seems like a duh thing, right? So most are actually forced to buy their lithium-ion cells from LG or other manufacturers. And Tesla's been doing that for years. But they're moving to create their own in-house cells. And they've got the benefit of so many years of R&D that their inevitable cost per kilowatt is going to be so much lower, and is already lower, than what cells can just be bought for on the open market. Now, in all fairness, this is total speculation. Tesla's current cost per kilowatt hour is like a Fort Knox closely guarded company secret. However, it is generally thought that with its current partnerships with Panasonic, LG Chem, and others, Tesla is like ishy 20% below the market average costs. So just sort of doing the math, the market average for lithium-ion cells in 2020 was about 157 kilowatt hours. So by doing our own math, 20% below that, Tesla's cost is around 125 kilowatts per hour. That is a big advantage. So that means that Tesla can either charge less for their cars or charge the same but offer infinitely more range, which is kind of what we're seeing right now, which either way they go, it's a point to Tesla. So autonomy and technology as like a service is a huge way Tesla is going to find ways and continue to make money after the sale. Traditionally, you bought a car, if it was a 2020 car, that was as good as that car was ever going to get. With a Tesla, there's hardware already in the car that can enable new features. You can choose to buy their full self-driving package after the fact for additional $10,000. That is unrealized revenue for the company that could happen 1, 2, or 3 years after the point of sale of that car. That is an amazing advantage that certainly gives them an edge over the competition, especially right now. Safety is also important. Teslas are, as far as I can tell, the safest cars on the road. Every model they've produced, save for the Roadster, every model that's out right now, has achieved a 5-star crash rating on every single category. The moral, I guess, if I could conjure up a vision 5 years into the future, I think Tesla's still gonna be going very strong, producing close to 2 million cars, and they'll single-handedly have led the United States and the rest of the world into the electric revolution. And I think their stock price is going to reflect that. Bubble, not yet burst.